The meme stocks are back. AMC went from around, well, where was it? About $17 on the 25th of May, traded very briefly through $70 and has fallen back to 48. So does this mean we're going to see more volatility, or actually have meme stocks already peaked? Thought it'd be interesting to take a look at AMC, very much in the news over the last couple of weeks. Of course, we saw a surge back at the beginning of the year. Mid-Jan, it was trading around $2 a share, and then peaked just shy of 20 into the end of Jan. Then it went, somewhat quiet, sort of flip-flopping around $10 a share. But then into the beginning of this month, we've seen it trade as high as 70 again. Massive volatility. We can see here, 3rd of June, it almost halved on the day after trading up above 70. It's settled down over the last couple of days. So where could it go next? So as usual in this video, I'll talk a bit about what's been driving the stock. Then we'll come back and take a look at things in a bit more detail. Hello, I'm David Jones from Capital.com. And I thought this time around we'll take a look at probably the most popular meme stock over the last couple of weeks, AMC Entertainment. So as usual in this video, I'll talk a bit about what's been going on, why we've seen the price moving like it does. Then we'll jump onto the platform, take a look at things in more detail and see where any opportunities might be. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel, and it means we can continue to push out lots of different content on the various markets that we look at during the week. Okay, let's get into it and take a look at AMC in a bit more detail. So AMC, it's an American cinema chain. It's the largest cinema chain in the world. That's not why it's been in focus over recent months and weeks, but more of that in a second. If we wind the clock back a bit, in 2017, the share price was $34. Then at the beginning of this year, it was trading at $2. So we'd seen the share price lose 90% plus in under 4 years. But by the end of January of this year, the stock had traded as high as $20, going from $2. And if you cast your mind back to then, you might remember activity by one of the Reddit's social media site, subforum WallStreetBets, were targeting certain shares out there with large short interest, where institutions had bet against the company and were expecting the share price to fall. So contributors to WallStreetBets targeted some of these companies, buying up the stock in the hope of setting off what's known as a short squeeze, where the price gets pushed higher and those who are short, who are betting that the price is going to fall, start sitting on bigger and bigger losses. So we're forced to buy back the stock, perhaps cover their losses, and of course fuel a rise higher. That's a short squeeze. So we did see that happen towards the end of January. GameStop was another stock you might remember from back then that got caught up in all of this. Then things went quiet. However, it's all changed again. These so-called meme stocks have come back into focus. And last week, we saw AMC trade as high briefly above $70 a share. Massive volatility, but again, another surge into the middle of last week. There are some saying that interest in meme stocks has peaked already, looking at retail investor flows, massive activity up until about Wednesday of last week, but some are saying, well, actually, this has dropped off Thursday, Friday of last week, so perhaps the mania is already over. Or on the other hand, of course, as we saw, it died off in January, but then came back with a vengeance. The company AMC has taken advantage of this rise and has used it to sell off some of its own stock that it holds, raised hundreds of millions of dollars, and used it as a way, it says, to strengthen its balance sheet. So it is something that has benefited the company. But also in something that is unprecedented, the company did make a statement last week, and it said that the surge in its share price was unrelated to its underlying business. So there's perhaps a warning there. It did go further than that and cautioned people about investing in its stock unless investors were prepared to lose all or a substantial part of their investment. And I can't quite remember the last time a company came out and said that. But that's one of the reasons that we've seen perhaps retail investor volumes drop off a bit towards the end of last week. Before we jump back on the chart, let's take a look at some of the levels to watch. Because it's so volatile, the sort of support and resistance levels, they're quite far apart in terms of price, but not so much in terms of time. On the 3rd of June, for example, we've got a high left at 68.75, but from the same day, it made a low of 37.65. So I think there are our first two support and resistance levels. But it is very difficult, I think, to make sense and trade a market or a stock like this with this sort of volatility with any sort of sensible risk controls. But let's see if we can make at least a little bit of sense of this. Let's jump back onto the chart and take a look at things in more detail. So here's our longer term view for AMC. I think I should start this off by saying it is very difficult to apply any sort of sensible analysis to a market that's moving like this. And you can see this chart here from 2016 to the present day just puts it into perspective how the volatility has been off the charts, not quite off the charts, but definitely nothing like we've seen before. But let's take a look at perhaps the year so far. So back here, we've got the peak in late Jan, up around $20 a share. Then the stock fell back actually down towards $5 by mid-Feb, trading broadly sideways since then. But it's this latest breakthrough that we saw on the 27th of May, so towards the end of last month, where the stock really started motoring again. And we saw it more than triple in value in the course of, a week. Since then, we have seen things calm down. I suppose if you were going to apply our usual form of analysis, looking at trends, we do have a trend. This is on the hourly chart from the 27th of May as it started moving out through $20 a share. And arguably it's come back to the trend now, but clearly one like this that's gripped by so much, I don't know if hype or euphoria are the right words to use. I think it's very difficult to apply any sort of sensible risk management. We have seen during June the $35 level provide a floor for the share. You can see on the way up, we paused here, 2nd of June, came back onto it, came close to it, 3rd of June, trading down to 37, and massive volatility. I think whenever we talk about these in the live streams, I always refer to them as a bit of a lottery ticket. If you buy and you get lucky, it's great, but I think it's difficult when we've seen something halve in a day. And I'm sure there are plenty of people who've bought above 60 who at the moment, are sitting on significant losses of about 20%. As the company said itself, it was cautioning against investing in the stock at the current levels. We'll see how it plays out, but I suppose from a support point of view, 35 is a level to watch. So looking at it now, if it was to start breaking down from where we are now at $48, they'd be looking to see if buyers came back in this sort of 35 to 37 area. I think if we lose 35, perhaps the risk is it goes dead again, like we saw after January and flip-flops around. So I think at the moment, we have to appreciate the risk of investing in stocks like this. Volume data has already shown that volume dropped off drastically towards the end of last week, Thursday, Friday of last week. And we're seeing that clearly playing out in the stock price. An interesting one to watch this week if we do see any of that mania coming back. But if we did see weakness, like I say, I'd be watching the whole 35 to 40 area, see if the buyers come back out. And perhaps, in the short term, we will have another look at those 4th of June levels, up around $55 a share. I think that could be one short-term target. If we break through there, then perhaps we have a look back at the 3rd of June levels. But a difficult one to apply sensible analysis to, but an interesting one to watch nonetheless. That's it for the update on AMC. We'll keep an eye on it and, of course, come back if things get more exciting again, if that's possible to be more exciting than they have been in recent weeks. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.